Good afternoon, everybody. This is Mark, and we're back here for the daily recap. Scott will be back to, probably not tomorrow, actually, probably Monday. This market is keeping everybody on their toes. Traders, investors, institutions. What is the next move? Is it going to be up? Is it going to be down? Or is it just going to be a little bit of sideways action for us? And it's all headline related. Intraday, we're getting more and more headlines, really, in the last few days that say the meeting's on, the meeting's off in Europe, the meeting's on in Europe, and obviously with the Greece news. That is making for really a tumultuous trading environment. But at the same time, things are thin. We did still make our lower highs, which from a technical standpoint in the last, I would say week, is technically still strong, but I'm still seeing some breakdowns. So I'm seeing lots of conflicting, ideas. I still see rotation. I personally took off some longs in the swing that really, just these gyrations are just, really getting you, stomach churning. And it's just a little bit better move to take a step back. What's happened in this market? Well, we made a higher low, and it looks like, 119.50, 119 should hold in the spiders. If it doesn't hold, you might see, even 118, 117.50, 116 in that area. And that will mean we need a little bit more consolidation and work in order for us to really, break out of this range above the 123 and hold there that we did the other day. But I see rotation, and I continue to see rotation. We know Apple missed earnings the other day. We know Amazon, really has taken a little bit of a haircut. We know some of the high betas really are just hanging out or drifting lower. That's fine. Where I see the rotation is in oils and the banks. You take a look at the oil ETF, obviously, popped its head up the other day. Still is basically just 4 days of back and forth action. At some point, it looks like above 122, 123 on the OIHs. The ETF is going to be moving to 130. That should make, obviously, some of these other stocks, APC, APA, which have, again, have had good moves off the bottom. Apache, which looks pretty nice, tests some of their moving averages to the upside. It looks like, the 50-day for APA. EOG, also another one that has moved up, but I'm not so, I'm not so certain these things are just going to stay and play nice in the sandbox. I don't think that's going to happen. Same thing with the banks. Goldman's earnings, not so good the other day. Woke up, was up 5, hit basically its, I think it was its 50-day moving average, around 104.40. Went above there, came back below. It's now trying to base above 100, every day it's been closing about 100. That to me means it's trying to find a little level for it to really propel itself from. We'll have to wait and see. I keep saying the market doesn't go anywhere without the financials. I still think that's in the cards. So if the financials do not rally, I think we're going to probably have a little bit more downward action. Looking at charts and looking at technicals, they're taking some charts out. They're taking some stocks out of the equation. Some of the plays we've been looking at, GMCR, broke down below all moving averages. Einhorn was the reason why it was the catalyst behind it. Stock's done for a while. It's going to go all on Netflix, where it's just going to try to find ping pong a range. You can make some little trades in there, but don't be backing up the truck trying to catch a bottom on these things. It's going to take weeks, if not months, for something to happen. And I just see that more and more. Win, same type of action. Came out with earnings, good, bad, and different. Most stocks seem to be getting hit, and Win was no exception. Not great earnings. I was saying either 130 or 140. Obviously, 130 came first. It's now, it hit 120 today, filled the gap. We'll have to wait and see what's happening accordingly. SanDisk came out at the close. Looks like it's a little unched. CMG actually, I think, looks up a little bit, but to me, technically, there's nothing really compelling either way. I came in this morning without a whole lot of conviction. I'm leaving today without a whole lot of conviction. I keep trying to look at the VIX as a vehicle for me to really get indications on which way the market's going. You can obviously look at the true indicator, the VIX, or I look at the ETF, the VXX. It's been giving me a good tell on whether this market's really meant to, stay up for the day or really come in And the closer you watch it, the more in tune you will be accordingly. So overall right now, I'm pretty much agnostic, I would say. I think my opinion could be swayed either way from day to day, depending on what the market gives me. I'm taking trades accordingly, and I think we're getting two-way action continuously every day. Yesterday was a good example. You got the longs, then you got the shorts. Today was a good example. You first got some shorts, win some rollovers. GMCR rollover. Even, not really Netflix today. Apple rolled over a little bit. Baidu, nothing exciting, but obviously it had a little bit of a downtick. And in the afternoon, you had a nice $4 move in some of these stocks. GMCR obviously a little bit bigger move, but still closed with a red bar means lots of damage is done. So I think if you can approach the market without a whole lot of opinions and understanding this turmoil in Europe, this turmoil overseas is really the factor on what's really going to move us one way or another. I know where we've been and what we've been doing. We're in a 6-week range of high volatility. And 6 weeks, it's going on 2 months, 2.5 months now of high volatility, lots of uncertainty. We popped our head out of there the other day. We're right now back in that range. We have to close and stay above there for a period of time, usually at least a day or two, and then maybe we're off to the races. I don't think they're going to give you a free ride in this one, meaning the market, to just say, free and clear, here's the green light, we're going to be buying, and there's no looking back. I think it's going to be a choppy ride. I think we're in for this volatility. I think it's here to stay, and I think you have to embrace it. And embracing it means you have a few ideas. You look at key moving averages on the upside, 50, 200. And the first time they touch them, in my opinion, they're nice opportunities to be key resistance levels in order to short. Now, same thing around. The second time it touches the 50, breaks through, it's probably, the next time it comes back down there, it will actually be support rather than resistance. That's how I'm looking at this tape. I think eventually, some of the ags and some of the oils will reach their 200 days. I'm looking at some of these stocks that are really a little bit farther away from the 200 days. I think you're gonna find that the 200 day will be reached somehow. I don't think it's going to be a straight line. So keep that in mind. Obviously the high betas, a lot of them are still trading way above their 200 days, and that's why they need to rest. I wouldn't be surprised to see Apple try to touch its 50-day down to 287. I don't think it's going to do it in one day, but I could see it, slowly getting that area at the 50-day, which is 287. And we'll have to wait and see what happens with Amazon's earnings. I wouldn't be surprised, even if it beats earnings, it doesn't react the way people want it to. But with that being said, I think we're going to have a whole lot of trading that's going to happen over the next few weeks, to finish out earnings season. I think the volatility is here to stay. As long as the VIX stays above 30, we're going to be in this uncertain action. I think you're going to get this whipsaw, 100, 200 point movements in the market every single day, which from a trading perspective is good. From an investment perspective, it's a little bit hard and it's very difficult from a trade, to actually just pinpoint and say, I want to stay in and be able to withstand some of these gyrations. But that too will change. You just got to be patient right now, guys. Respect what we're in. We're in a volatile environment, and respect that it seems like something changed, but every time I feel like something has changed and I, state it as such, I get the other way. So we are at the top end of the range of a 6-week cycle. That did break out a little bit the other day. We're now back in that area, and you can see it on the charts. So it needs to see the base here for a period of time to actually build a strong enough base for it to propel higher. Or the other way is going to happen. It builds a strong enough base back and forth, and then it breaks back down. That means we're going back to 115. So you're going to have to wait and see what happens. I do think the rotation is going to continue to play. Is going to continue to play with us. So look for the oils, look for banks, and even the home builders and some semiconductors have been reacting accordingly. And that's for people who haven't been in this market a long time. These are sectors that, quite frankly, the semis and the home builders that have not been in play for a long, long time. Keep them on the radar, stay flexible, and I'll see you back here tomorrow.